Good morning, and thank you for being with us. Welcome to US Arab Radio. This is Khalil Hachem with the Local Connections. Thank you for being with us and for the privilege of your time. You are the best of audience. We have a great program for you today. We are going to be talking about interest rates, housing market, mortgages, and economic development in the Detroit area later on in the program. As you know, this month the Feds kept interest rates the same. We were all hoping that they would start reducing the rates little by little to boost lending and give a relief to those who are borrowing, whether it is for a car, for a home, or using their credit cards. This is even a totally a different topic, and we hope to talk about it, sometimes in the future because this is a much bigger problem. And I'm talking about credit cards. The Fed said that they are worried about inflation because it has not tempered yet enough the way that they want it to be under control. Their target is 2%, and now it's still a little bit above 4 or near 4. With us this morning is Brigitte Jaward Hachem. She's the president of Infinity One Corp, mortgage lender, and State of Michigan mortgage advisors. Good morning, and thank you for being with us.
Good morning. Good morning, everyone.
I appreciate it. I know you've been in the mortgage business for more than 30 years, but what is a State of Michigan mortgage advisor?
State of Michigan is it's a mortgage advisory board that's related to rules, regulations, compliance, research. We meet every month or quarterly, and we discuss the mortgage industry and the state of Michigan and anything that's related to examinations, laws, and things like that.
Yeah, so it's basically advisory to the governor. Is that what it is?
Yes, it's an advisory board for the state of Michigan for the financial and insurance industry.
Okay,
so it's part of the financial and insurance industry.
Yeah. Good luck to you on that one. So interest rates was not reduced; it was kept the same. We were hoping that they would. How much of an impact has it had on mortgages?
Well, interest rates historically go up and down over the time I've been in this industry, about 30 years. I started when it was about 9% and 10% at the time, and we went down to the 4s, 5s, and it's kind of like a roller coaster, follows the market, follows the economy. About in 2021, 22, we had the dips of 2 to 3%. That's going to be very difficult to see again for a very, very long time, maybe not in our lifetime. But we are in the 7s right now on the 30-year fix. And what is the impact it has on the real estate industry? For some reason, it's kind of like a balance, because a lot of borrowers that have, or homeowners that have homes that are based on those low rates are not selling because they're not going to be able to find or finance or do anything with that rate right now. It's 7s and 8s now. So they prefer to stay. So that's creating a very low supply of housing. And as you know, people are growing, families are growing, housing is always going to be in demand. It's like food. You always need housing. So that's not impacting much the real estate industry as much as we thought it would. So the supply is very low and the demand is high. So there is still a demand for housing. Sure. And the best thing to do is actually find a house that you like or client likes, and then we can always refinance later when the market goes down. Hopefully, based on inflation and based on the economy, it will go down a little bit towards the end of the year. But I don't see it going down, taking a dip like it did a couple of years ago.
Yeah, normally it is between 5 and 6%. Is it? Wouldn't that be correct?
Yeah, the norm is between 4 to 6, 4.5, 6.5. It's been the past 10 years, I would say, on an average. But if they can take advantage of 15-year fixed, which are lower, or 20-year, 10 or 15-year, there are rates that are 0.5% lower. So you can still get rates in the 6s, but with paying additional points. So the closing costs are a little bit more.
Yeah.
But the most important thing now is to actually find a home and take advantage of the market, because inflation is going to be a major factor in price increase over the years.
Which means homes will be more expensive later on.
Definitely, everything's going to be more expensive. As you know, even some cars are the price of homes right now.
Yeah.
All right. So everything is going to be. So anything you buy today for 100 is going to be 200 next year, based
Yeah.
on inflation.
Yeah.
How about you have factors like demand and supply, which is a major factor,
Yeah.
and it's
Yeah.
going to get worse.
Yeah.
As I told you, the population is getting more. People are moving outwards. Families are growing, so there is going to be always housing.
When interest rate is a little bit lower or near 5 or 4, does that mean the buyer can borrow more money
In reference to when you
buying a
say
home?
money, well, the payment will be lower, so they can borrow a higher loan amount based on their
Yeah.
qualifying
Yeah.
range. Yes,
Yeah.
definitely.
Yeah.
The
Yeah.
lower the rate, the lower the payment, the more
Yeah.
they qualify for.
Yeah. For example, between 4 and 7 right now, if I'm now qualified for 250, then I'll be able to maybe borrow 350. Is it that
No,
kind
probably about 300. You have to
of? Okay.
take into account every property taxes are going to defer. So
Mhm.
that's going to make a difference in how much your monthly obligations are. So
Sure.
it is going to vary.
Yeah.
But the rates are probably going to be, I would say they'll probably hover around sixes in the
Okay.
six and a half range. Historically, of what I've seen, I don't see a big dip in the past year, in the next year or two.
Mhm.
But I mean, 6 is still okay, but we got spoiled with the 2 and 3.
2 and 3, yeah.
So,
Those
and
are not coming back.
no,
Yeah.
well, you never know. Never say never. Everything is,
Yeah, but I mean, not anytime soon.
yeah, no, I don't see it in the next 5 years,
Yeah.
honestly.
Yeah. Yeah.
From
I remember when
historic
I bought,
difference.
yeah, when I bought my house in 2004, I mean, my interest rate was 5.4, and I kept it there for a long time. And what people don't account to, don't really realize is the value of money. Money loses value over time. So the
We have
$600 mortgage, then it's nothing right now,
definitely, and then a $2,000 mortgage now is going to be much, much less in about 5 years.
Yeah.
So the best advice now is actually find your dream home or dream property, buy it with the 20% down, not less if you can. So you can eliminate the private mortgage insurance and keep the payment low and just get into the house and then when the rates go down, refinance is always an option. Finding a home is hard, especially if it's your dream home or a retirement home or first time buyer or growing family. Once you find what you like, that's the most important factor. And then after that, we can always deal with the rates.
Yeah.
Because
Yeah.
as you know, rentals are very high.
Mhm.
They're very equal to buying a house.
Mhm.
So might as well just pay it towards a house that you own and live in it peacefully.
Gain equity over time. And that's what I tell
Definitely.
people, I mean, if you buy a home now, in 2 years, value is going to increase. You're going to gain equity. Then you have equity in that home. Where if you rent, that's you're really paying somebody else's mortgage.
Well, not only that, Khalil, it's stability.
Mhm.
You need to have a place of your own.
Mhm.
Stability, you're there, you're stable, and peace of mind. Nobody's knocking on your door for rent. You're just dealing with the bank, which
Yeah.
not gonna knock on your door unless you don't. When you don't pay, that's different. But as long as you're paying rent or mortgage, you're going to live in quiet enjoyment, I must say.
Absolutely. Now, it is a balance when interest rates are high, although prices of homes right now are high, but then if interest rates fall, then price of homes is going to go up more because we're going to have more buyers on the market. Is that correct?
Not really, not necessarily. The prices are still gonna go up, even if they go up or down. The prices of properties are going to go up.
Yeah, yeah,
We're
yeah.
not going to have, we have a lot of clients that are waiting for the market. As you know, I'm also a real estate broker. So they're
Yeah.
waiting for the market to go down and they're waiting. That's not going to happen. For 5 years, I've had the same client. He hasn't found a home yet.
Sure.
Telling me the same thing. I'm like, it's not going anywhere. It's going to get worse. There's going to be more demand, and the builders. When we had an 08, 09, whatever happened in 08, 09 is not going to happen again. We're not going to have loose lending like we did before. Lenders are much more stricter right now. Home buyers are more qualified. Most of them are more qualified. The generations the newer generation is more into education, professional, they're working. They all need housing. They are all want to move on from their families and move on in their life.
Sure.
So we're not going to have the issues we had before. It's not going to happen anymore. That was a record thing that happened. That was historically impossible, but they're not going to let that happen. So going forward, even if the rates go down, you're going to have pricing up. We had that issue 2-3 years ago. The rates were 2%. People were overbidding on properties, $30,000, $40,000, $50,000 over a property, even when the rates were lower. We were having that bidding issue. We're having it now again.
Yeah. It's going to be more would it be fair to say there'll be more competition because there'll be more buyers on the market because they can borrow more?
Definitely more buyers, and sellers are not selling.
Yeah.
They're holding on to their 2% or 3% and saying,
they're happy with that.
Where are we going to go? And then builders, when we had this foreclosure wave that we had before, they stopped building. There was so much properties.
Yeah.
So to be able to catch up to the demand, it's going to take another 10 years of being able to supply more properties out there. And it kind of follows each other. And we have more people growing, more people looking for properties.
It's more costly to build too now.
Definitely more costly. Not only that, as you know, brand new homes tend to have higher property taxes than older homes. And we see the trend that, why not just improve my property and just stay where I'm at, make it look nice and just not move rate wise and cost wise.
Sure. Now, what we're going to do is we're going to take a short break. We'll be right back. Please stay tuned.
Are you going to start a restaurant or grocery store soon? Do you need floor plans and designs? Call Naji Abood at 734-744-9796. Do you want to buy kitchen and restaurant equipment at discount prices? Call Naji Abood now, 734-744-9796. New Concept Products and Design, the trademark of kitchen equipment. 5% discount on all purchases of $75,000 or more. New Concept Products and Design, new location, 31185 Schoolcraft in Livonia. Learn more at www.newconceptproducts.com. Call Naji Abood, 734-744-9796.
Life for Relief and Development has now been rated as one of the best charities for humanitarian aid. Life's humanitarian projects span the globe, and Life is celebrating its 30th anniversary of providing essential life-saving aid to people and communities in 36 countries, regardless of race, color, religion, or cultural background. Where there is life, there is hope. And when disaster occurs here or around the world, including being one of the first responders to the Turkey-Syria earthquake crisis, Life for Relief and Development rushes in to provide food, medical aid, and shelter to those in need. We are looking to help the earthquake victims, and we take 0% overhead on emergency donations. So please help improve these efforts. Learn more about our involvement to help the helpless and bring hope where it's needed most, and make your tax-deductible donation to Life for Relief and Development now at lifeusa.org or call 248-424-7493. That's 248-424-7493.
In a perfect world, everyone would be a perfect driver.
Hands at 9 and 3, everyone.
9 and 3.
Everyone would follow all the rules.
Please, go ahead and merge. I'll make room.
Thank you, fellow driver.
And nothing unexpected would ever happen. Even the squirrels would know the right time to safely cross the road. In this perfect world, you wouldn't have to wear a seatbelt. But in case you hadn't noticed, we don't live in a perfect world. About 1,000 people in Michigan die each year in vehicle crashes, and thousands more are injured. Wearing your seatbelt reduces your risk of death in a crash by 45% in a car and by 60% in a pickup truck. So until we find a perfect world to drive in, make our imperfect world safer by buckling up. A message from the Michigan Office of Highway Safety Planning.
Welcome back, and thank you for being with us. This is Khalil Hachem. We're talking about mortgages and mortgage rates. And now you mentioned something, and I would like our listeners to understand what you're talking about, and that's PMI. PMI is private mortgage insurance, and that is when is it we have like two loans together, or how does PMI factor? Why do we have PMI?
PMI covers the difference between the 0 to 20% for down payment as equity. So it's a private mortgage company that will give the lender the difference in the price and the down payment, and then you make the payments to them. It's like a kind of like a separate small loan.
Mhm.
It normally varies if you put less than 20% down, depending on how much the down payment is. If it's 5%, the rate is going to be higher. If it's 10%, it'll be a little lower. It's 50%, it's lower. But just to factor in, it's for just on a rough basis, it's 0.5% to 1.5% of the loan amount, depending on how much you're putting down.
Okay.
So let's say if it's $100,000 loan, depending on how much you're putting down, your payments is going to be an additional $50 to $100 a month.
Okay.
Depending on how much the down payment is.
Ideally, somebody buys a home with a 20% down.
That will be the ideal situation.
The ideal situation.
Have
You know,
more
you
payments.
don't have to pay PMI, and then you can take care of your own insurance and taxes, so there'll be no escrow.
Escrows is a choice with 20% down, and
Yeah.
even with some lenders, we can do non-escrows at 5% down.
Mhm.
But-
It depends on the lender.
Depends on the lender, but the norm is 20% down. You can either have your property and taxes included in your payment, or you can have them separate. But
Mhm.
once they don't know how to budget, some of them prefer to have it included. The only thing about that is that payment will go up or down depending on your property tax escrows. So if you're short, your payment's gonna go up. If you're on a budget, then you're kind of in a little trouble here because
Sure.
payment's gonna go up for a short period of time, they'll go down. A lot of people prefer to pay property taxes separately, so they know they have a fixed rate. And the payment is just fixed and constant for a period of time, whatever that is, 15,
Yeah.
20, 30 years.
Yeah. It depends on whether a person, can manage their money correctly or not.
Yes.
Okay. Okay. So, and are there any other provisions in which it could help, like when somebody wants to go and buy a home? I've seen people like they're looking for a home, and all of a sudden they go out and get a car, or what are the things that they shouldn't do?
First thing is to work on the credit score, make sure that score is good, because the higher the score, the better the rate. The lower the score, there's bumps to the rates and costs. Next thing is to gather as much down payment as possible, 20% down, and not, while in the mortgage process, not to add any additional debts so it doesn't affect the debt ratio. So if you need to buy a car or other things, or vacation or credit cards, try to keep that, try to put a hold on that until the mortgage process is complete and done and closed, then you can do what you want after that. But buying a car, I mean, it's very important to some because they need it all depends. If you're
Sure.
desperate need to buy a car right now or not.
Sure,
But
sure.
probably hold off on everything that will affect the mortgage process.
Yeah. What can someone do to improve their chances of getting better rate and better more money?
Better rates and more money in reference to a higher mortgage amount.
Yeah.
So the lower the debts, the more, and of course, the gross income. Have a
Yeah.
stable income, not to change income in between, not to change employment in between the mortgage process, just to stay constant in their own place of employment. Not to add any additional debts, like I said. Try not to apply for credit so you don't have a lot of hits on credit inquiry on the credit report. That reduces scores. And make payments on time as much as possible, not to lose out on any payments, and save money.
'Cause you still have to pay. You still have to pay closing cost.
Yes, closing costs are going to vary on if seller is going to give any concession, if the rates, if they're buying down interest rates, if they're just doing a zero, no points, all depends. Closing costs depends on what they choose in reference to rate.
Okay, so
The standard costs like appraisal and title are all standard for it. They're all
Yeah.
standard costs.
Yeah.
But any additional costs are going to be if there's going to be a reduction in the interest rate.
okay, the average of closing cost on a 200,000 mortgage or 300,000 mortgage, somewhere $7,000, something like that.
No, mortgage costs on appraisal, title work, credit report, basic costs, underwriting fees shouldn't exceed $3,000.
Okay,
Those basic costs, the basic costs.
yeah,
Anything over that, like origination fee and discount points, are
Yeah.
additional. So
Yeah.
it could, all depends on the rates.
yeah. What should borrowers be aware of, like red flags? What kind of fees that they level on them?
Well, the standard fees are normally appraisal, title work, closing fees, underwriting fees. These are standard processing fees. The points is what you have to look for, discount points. Like I said, every case, it's a case by case basis. So if the scores are low, they might get hit with some additional points. But
Okay.
those can be factored into the rates also. So it could be either paying points or getting a higher rate. Bump into a higher rate. So it's all going to vary. As long as the standard costs are there, the points are explained to them why, in addition to lowering the rate, if they're looking for a lower rate, then that would be done.
Yeah. That relationship between a lender or a loan officer and the buyer is very important.
Definitely, yes, definitely.
Yeah. Yeah, you gotta work with somebody you trust. And now we have a 3 days before closing in which these are mandated by the government, so people can review the numbers. Is that what it is?
Yes, they can review, they get disclosures. At the beginning of the application, everybody gets disclosures they have to sign. And then prior to closing, they get closing disclosures that they look at, and pretty much should be about the same of what they expect at closing. And that's for purchases and refinances. On refinances, even after closing, nothing disperses for about 3 days. They have to look at the documents and either rescind or approve. They have the choice of backing out of the refinance even 3 days after closing, if they choose to, on refinance deals.
Oh, okay. Okay. So they can just say, you know what?
Yes,
This is
they have,
what we don't
even
want.
after closing, the consumer has 3 days to review and rescind. And
Okay.
need to do that, they have to do that before the, kind of within the 3-day period. Before
Absolutely.
it disperses, especially if it's a cash out refinance.
Yeah. Any other issues they need to be aware of?
Everything is pretty much standard, so all lenders are about the same and reference, about similar, same in it's the relationship you have with the loan officer you're dealing with,
Yeah. Yeah.
and how attentive the loan officer is to the client and their needs, and looking out for their welfare. For example, I've had clients come to me with a reduction of 0.5% on a loan to refinance, and I wouldn't even recommend it because it's not worth it.
Sure. Sure.
And by the time they accrue the cost and extend the term, it's not worth it for 0.5%. If it's not like 2% or more, it's not worth refinancing. So
Sure.
the loan officer has to look out for the
Interest of the
interest of the client, even with buyers. if there depends on all borrowers, how long they're going to stay in this house. If you're looking for a starter home, you have to have more information than just, I just want to buy a house. You have to know the dynamics of the family. If it's a starter home, it's somebody that's relocating soon. Are they better on a 15-year term or 5-year arm? Historically, the adjustable rates were much lower in the past, where when the rates were at 9 or 10%, we were able to offer 5 and 4% at the time, but they're not as competitive as they are in today's market. They're very similar to the 30 years, so we don't even sell the 5-year ones like we used to before.
What's an ARM for those who are not familiar with it?
Right, it's an adjustable rate that's fixed for 5 years and then it adjusts to based on the market to a cap.
The market, yeah.
And there's a lifetime cap on. But those were very competitive in the past. We had all kinds of adjustable rates, cost of funds index, and LIBOR. We don't have those right now like we had them before in the past. They were very, very competitive. When the rates went down, we were able to refinance those back into a fixed rate.
Yeah.
So like I said, it's all case by case basis. Everybody is different. Every buyer or borrower has different scenarios. So you have to work with those scenarios. Is it worth it or not? If they're staying in the house for 30 years, if this is a lifetime home, then yes, we're looking for the best rate out there. If they want to pay the points, they'll pay the points to lower the rates and not take the risk of maybe the rates might not go down. But if it's somebody that's going to be there for 5 years and pay 5 points to get a lower rate, or it's not worth it.
Yeah, it's not.
So it's all going to depend, like I said, on the relationship,
Sure.
with the officer, and what the scenario is, and the profile of the client.
Wonderful. Is there anything I haven't asked you that people need to know?
Well, everything I'm saying, I guess, is basic knowledge for a lot. You probably heard it from many people. Again, rates are hopefully going to go down, but not anytime soon. Now is a good time to buy a house because prices are not going to go down. So if you do find a house that you like, go ahead and buy it. We'll deal with the interest rate later on, once hopefully they go down. And preferably 20% down. And just, you have to do what you have to do, I guess.
Sure.
This is the market. We just have to deal with it. This is the way things are, and we just have to deal with it.
Still better than renting.
Definitely much better than renting. And we did discuss this about building equity.
Yeah.
The important thing is the peace of mind, having stability.
Yeah.
And a home for everyone. After all, everyone deserves a home.
Sure. How can people reach you if they need help?
I can give out my mobile number. It's 313-825-4187. Again, it's 313-825-4187. And I'm open to any advice. Consultation is free. So
thank you. I really appreciate you taking the time to be with us, and we're gonna take a short break. We'll be right back. Please stay tuned.
Thank you, Khalil. Have a great day.
Absolutely. Please stay tuned.
With more than 30,000 successful in vitro fertilizations, IVF Michigan is now ranked as one of America's best fertility clinics according to Newsweek magazine. IVF Michigan fertility centers are the recognized leaders in high-quality fertility care. With locations in Bloomfield Hills and 9 other cities in Michigan and Ohio, IVF has experts in all aspects of the field. A founding member, American board-certified Dr. Nicholas Shama, is one of the leading reproductive endocrinologists in Michigan and Ohio. He has performed over 20,000 successful IVF cases, and it's helped thousands of couples fulfill their dreams of parenthood. When it's time to get personalized care from Dr. Nicholas Shama at one of America's best fertility clinics, call IVF Michigan Fertility Centers in Michigan and Ohio toll-free at 855-952-9600. 855-952-9600. Get ready for an amazing experience at Ishtar Restaurant on 15 Mile Road in Sterling Heights. Enjoy excellent hospitality from owners Ali Al-Baghdadi and Fatty Bonham, serving the best in Mediterranean food. Try Chef Ali Al-Baghdadi's famous shawarma, the best Iraqi grills and food, and the best Arabic and international dishes. Dine in our authentic atmosphere or take out. Call 586-698-2585 or check us out on Facebook. Ishtar Restaurant practices all CDC guidelines and is open every day 11 a.m. to 10 p.m. Have an amazing experience today at Ishtar Restaurant, 3625 15 Mile Road, Sterling Heights.
Hey, Michigan drivers. Are you sending or answering group chats behind the wheel? Checking emails at the light? Calling family or friends on the commute? Michigan's hands-free law makes it illegal to manually use electronic devices while behind the wheel of a vehicle. Breaking the law could mean fines or even community service. Go hands-free, just drive. It's the law. Learn more at michigan.gov/distracted driving. A message from the Michigan Office of Highway Safety Planning.
Welcome back and thank you for being with us. This is Khalil Hachem with US Arab Radio. We're going to be switching to a different topic now and talking about the growth, economic growth in the Detroit area that we are experiencing. And this has not happened by accident. There are a lot of work being done to get where we are, and there are a lot of teams that are working to really get to this point of success, and there's a lot more success to come. With us this morning is Shannon Selby. She's with the Detroit Regional Partnership. Good morning, and thank you for being with us.
Good morning, Khalil. Thank you for having me. I really appreciate it. I'm excited to be here today.
Absolutely. Tell us a little bit about you first, and then we can talk about the Detroit Regional Partnership.
Sure. So I'm the Vice President of Real Estate for the Detroit Regional Partnership. I oversee the inventory and the real estate for our 11-county region in the Detroit market, which is comprised of 11 counties and 348 communities. So what my job is to do is to prepare the real estate to be ready for projects as they come to our region, as our business development team brings them to the region, to make sure they're ready and they're available vacant land to construct buildings on.
And what is the Detroit Regional Partners?
Sure. So
Partnership, rather.
Sure. Detroit Regional Partnership is fairly young. We were stood up in 2019 by a group of CEOs. So 2020, the pandemic hit. So we were, sat down for a couple of years, but we still kept working. We have hefty goals by 2030. So, for example, our new investment goal is $10 billion by 2030, capital investment. Today, we're at $8.6 billion, not bad. So we're well on our way. Our jobs goal is 50,000 jobs by 2030. And we're at 33,000 jobs, so well over half, well on our way, despite the pandemic and the shutdown. And our payroll goal was $2 billion, to have $2 billion in additional payroll by 2030. We've exceeded that already, and we still are only halfway, in terms of timing. So we're at $2.3 billion. We've traveled 16 countries, 15 states, and we've met with over 200 companies. So Detroit Regional Partnership, to answer your question, though, is a no-cost available resource for companies looking to locate to our region. So we handle incentives, we handle workforce resources, we handle the real estate for industrial and office. And again, it's a single point of contact, and there's absolutely no cost to a company looking to come to our market or expand in our market. So whether they have a site consultant that's representing them, or they're just representing themselves, we can certainly help. We have a very strong business development team that travels the globe looking for opportunities to bring back to the Detroit region.
Wonderful. Now, when you're talking about real estate, you're talking about commercial or residential or both?
Sure. So this is strictly commercial. So it's industrial and office. So it's our business development team handles industrial buildings and office buildings. What I do is I handle the vacant land, industrial land. What's happened, Khalil, is that industrial sector has been so hot. The buildings are gone. So speed to market is critically important. What we've done is we've stood up a program called the Verified Industrial Properties Program, or VIP by DRP. This has grown from a $500,000 a year program with 9 pilot sites. These sites are vacant land, 10 plus acres, zoned industrial. So it's gone from 9 pilot sites, $500,000 a year program, to now over 41 sites and a $17 million program. So we're scaling rapidly to secure more manufacturing projects across the region, but site readiness takes dedicated staff and funding, and we have both. So what we're doing is we are incrementally getting these sites ready one step at a time. Michigan land is, the good news is we have lots of water. The bad news is there's a lot of wetlands that have to be dealt with. So that takes funding to get those sites ready. So basically what it is, verifiedindustrialproperties.com. It's a dedicated portal, no login or password needed. Anybody can go on there anytime. When you go on there, you'll have a desktop due diligence report that's been compiled by a third-party engineer. So gone are the days when companies come here and we say, well, we think this is what's on the site, or we've been told by the developer, the broker, the landlord, this is what's on the site, and then surprise, egg on our face. So now we're verifying and we're vetting these sites. What's really exciting is we're paying 100% for all of it. Gone are the days where a site owner had to pay for half freight. Now we're paying for everything. This desktop due diligence report takes 10 weeks, costs $16,000. We pay for it and we hire the engineers. Site owners, developers, landowners do nothing but sit back and just do a kickoff meeting and then a readout. That's on the portal. It's got utility information. It's got maps on wetlands and floodplains. It's got the site outlined. I mean, it's very sophisticated information, and it saves companies and site selectors 3+ months that they would have to do on their own to get all this information. Plus, we bring it to them in a drone video. So we bring the site to them. If that site consultant's on a plane landing in DC at midnight, they don't have to worry about talking to us. They can see it for themselves. So we've got drone video, we've got regional information, and then each site has its own page.
What's the site again?
verifiedindustrialproperties.com.
Verified Industrial. I'm just going to write it as you say it, so the listeners can really. Okay, verifiedindustrialproperties.com.
Yes.
Properties with an S, right?
Yes.
Okay. And this is what you mean when you say you prepare these sites for these companies to come in. And for the benefit of our listeners, when a company comes in, they don't just come in and spend money here. They bring jobs, they bring economic development. Do we have any numbers that will show what is the economic impact of what you've done so far?
So the new investment numbers show that. That's capital investment. So we had a goal of driving $10 billion worth of investment into our region by 2030. Today, we have driven $8.6 billion of investment into our region. We've created 33,000 jobs since our inception, really since 2020, because 2019 was an organized year, higher year. And then payroll, we've increased payroll by $2.3 billion. So companies like Nell, which is a gigafactory in Plymouth, in Wayne County, 507,000 square foot building, 400 million in capital investment, 517 jobs. Another one, Plastic Omnium. It's a hydrogen storage company, 175 jobs, 170 million in capital investment. So those are the kind of projects that we're bringing to the region. Fortescue is a Detroit, it's a Australian company that's landing in Detroit that we brought to Detroit, 232 million in capital investment and 600 jobs. So a lot of companies that wouldn't be considering the market that are in Europe or across the globe or nationally that we're bringing to the Detroit region.
Do you also work with local companies as well? If somebody local wants to develop a site, they can work with you as well?
Yes, we do work with locals. So especially if they're starting up and they need help with the real estate search, we have a very strong business development team. I would put them up against anybody in the country. Seasoned, really know their stuff. We have phenomenal public partners. So we work with Michigan Economic Development Corporation very closely. I work with their real estate team. Our business development team travels with them. Our county partners are really important. Our 11 counties, not only just the Tri-County, but the 11 counties are really important. We convene them regularly. We work with them daily. They're a big part of site readiness. And our utility partners, I mean, Consumers Energy and DTE are huge because we need them to tell us what's on those sites so we can put that on that report.
Sure.
We need them to be able to help expand those services. So site readiness is really a team sport. It takes everybody. And it's really important that we collaborate and we come together, and we're doing just that. Just yesterday, I was at MEDC in Lansing for their consultant on their sites program. So we regularly collaborate, convene, and really are rowing all in the right direction together.
Yeah. Do you deal with any brownfields?
I love brownfields. Brownfields are my favorite. I got to speak at the Brownfields conference last year when it was in Detroit. A third of our sites are brownfields. Why do I love brownfields and why does it matter? Brownfields are the best way to recycle that land. If it's contaminated, there's resources to clean it up. There's typically workforce around it because something was there before. There's typically utilities in the ground because something was there before and they had to switch on the lights. So we think it's a huge opportunity. Two very well-known brownfields in our program, Buick City, the former Buick City site in Flint.
Sure.
Ashley Capital bought that from Racer Trust. They're redeveloping it. It's now on our site called Flint Commerce Center. And the McLeod Steel site, another super fun, wonderful site that's in our program. We think there's huge opportunity for the region with the McLeod Steel site because it's multimodal. It's got access to a port. So very exciting.
For those who are not familiar with the term, what's a brownfield?
It's usually contaminated or it's an obsolete, abandoned property that a lot of the GM properties, when the GM went out, were left brownfield. So it's different than a greenfield. If you think about a brownfield, it's not a greenfield. A greenfield is usually farmland. It's been untouched, kind of virgin land, if you will. A brownfield is like the former Buick City site, right? Something was there, industry was there before and left.
Yeah. And cleaning it means, evaluate the soil, see what's there, and basically replace the soil and remove all the hazards so a new business can thrive there.
Yes, absolutely. It's the most sustainable thing we can do to land, recycle the land, clean it up, and put something wonderful there, create jobs in a community that so badly needs them, like Flint. And so we think it's just a phenomenal opportunity because the utilities are there. Getting utilities to a greenfield is more expensive than already utilities in the land. And it's a timing thing. So speed to market, you can get something on that site quicker if the utilities are there.
Absolutely. And when we're talking about brownfield, we're talking about possibility of federal and state funding. Is that correct?
If you take what a brownfield costs, it's typically lower than when a greenfield costs, right? But you say, okay, but you got to clean it up. There is so much federal funding with EGLE or EPA and EGLE, the state agency. We have consultants and our civil teams that are in alignment with EGLE that can help. They know their way around those grants and loans, and they're part of our team, extended team, that can help a company with a brownfield site.
COVID has left us with plenty of retail and office space empty. Cities and townships and counties, they're going to have to come up or revamp their zonings to, change, make it flexible, flex space and all of that. How are you guys dealing with do we have an abundance of office and retail empty and how do you dealing with that?
So we aren't in the retail market. Okay. But we do think there might be an opportunity for some of these vacant strip centers to eventually be reused in the future for advanced manufacturing if you can get that rezoned. Office buildings, I know a lot of office buildings they're talking about converting to residential, which isn't that easy. But to your point, the zoning is critical. We are only working on already zoned sites because some of the processes can be take a while and unpredictable. But we're also going to be looking at greenfield ag sites for manufacturing in the communities that want manufacturing. So we will be going into communities and saying, where are some acreage that is available that you would like to see manufacturing on? We're not going to be putting any plants or any modern manufacturing sites into communities that don't want it, but the ones that want it, that want the jobs, that want the high payroll, that wants investment driven, we'll be doing that. So look forward to that coming on the program in the coming months, adding to the program.
from your experience, some of these strip centers and all of that they're virtually vacant. What's the best use for that?
So I don't deal in the vacant retail, but I know that people have talked about rezoning for potential housing because there's housing issues. And like I said, if there was an opportunity down the road, we might think about taking buildings and adaptive reuse them in all sorts of fashion, but we're not there quite yet. We just started this program about a year and a half ago, and we're concentrating on vacant sites at this point.
At this point, yes, which is we could see a lot of PUD, which is, as you well know, it's rezoning for that particular spot instead of a general rezoning, which it takes a lot of time and requirements.
Yes, and some people have asked me, what do you think about how is interest rates impacting commercial real estate? Because I'm a licensed broker in Michigan and Arizona. I actually have practiced commercial real estate, and so one thing I'll say about the VIP by DRP, our site readiness program, we have fundraised and we have 17 million. We are fully funded. So this program is going to go forward, whether there's a recession, whether the Feds lower or raise interest rates, or despite the outcome of the election. I think that's pretty exciting. So for the next 3.5 years, we're going to be putting $17 million into our sites, which means that portal, those reports, but also, Khalil, we're going to be investing in these sites. Physical site studies, so an owner doesn't have to pay anything. We will do, if they're selected, we take 13 sites per quarter and then half those move forward to get physical site studies. So we're taking the sites from just researching desktop due diligence to those engineers, boots on the ground in those communities, on those sites, doing phase 1 ESAs, doing wetland delineation, doing geotech, which is important because the soils can hold a building and all kinds of stuff. And then if a site's in VIP and there's a viable project that comes to the market that wants that site, but they need additional support, we have a deal closing fund of another $100,000 to $200,000 that we will pay to get that across the finish line. We can do, test fits, which means putting the building on the site. We can do construction costs, more testing. So we're able to do that, which is really unheard of in the country. It's best in class site readiness program right here in Detroit.
And what's the benefit to you as a group?
It's a huge benefit to our citizens, to our residents, to our businesses. What does it mean? I'm preparing the real estate to get ready to match the real estate with the projects that our BD team is running around the country. So we can match those up. We can create jobs for Michiganders, drive capital investment, and make it a better life here, honestly.
Absolutely. What a great recipe for success. Is there anything I haven't asked you that people need to know?
No, I just would say this. People think that we are the Detroit Regional Chamber. We are not. We are the Detroit Regional Partnership, single point of contact, incentives. We travel the globe. There's no cost. We can help with research, with talent attraction, resources, and just getting somebody here and getting them familiar and connecting them. So really a strong organization. We have an amazing CEO, Maureen. I don't know if you know her, Maureen Donahue-Kraus. She's amazing. She's been in this market a long time and she's traveled the globe. She's a phenomenal leader, and I really attribute a lot of our success to her as well.
Wonderful. I really appreciate you taking the time to be with us, Shannon Selby from the Detroit Regional Partnership. If somebody needs to reach you, how can they reach you?
They can reach me via email, and then I can take that to whoever needs the best person to help them. So I'm at shannon.selby, SELBY, at DetroitRegionalPartnership.com. Or they can Google the Detroit Regional Partnership and see all of our team members and our contact information.
Absolutely. I took a look at that, and there is a really incredible team there. It's really wonderful to have you.
Very diverse team, which I love. Very diverse.
Absolutely.
Reflects our region. Thank you.
Thank you so much. I appreciate your time. We're going to take a short break. Please stay tuned.
Ziyad brand. Quality products from our family to yours. Ziyad Brothers Importing offers the finest quality products, including brands like Sultan, Kraft, Nestle, Hook, Rico Picon, Donna, and many more. Ask your retailer to carry these fine products because you deserve the very best. For more information, visit our website at www.ziad.com. That's www.ziad.com. Ziad, quality products from our family to yours.
At Top Rehab Physical Therapy Clinic in Dearborn, we provide effective physical therapy sessions in order to limit pain and discomfort. Top Rehab provides physical therapy care for any diagnosis prescribed by a physician, and we regularly see and treat conditions such as stroke, TMJ, fibromyalgia, sciatica, joint pain, and more. We use a variety of pain management methods, including modalities, soft tissue mobilization, and therapeutic exercise. If you're in need of physical rehabilitation or physical therapy, get the highest quality health care at Top Rehab. Most insurance is accepted, and we're open Monday, Wednesday, and Friday 8 to 6, Tuesday and Thursday 8 to 5, and Saturday 10 till 2. Call for an appointment today at 313-846-0555. That's 313-846-0555. Choose Top Rehab Physical Therapy Clinic on Michigan Avenue in Dearborn. Life's too short to be in pain.
What's my ETA?
Your estimated time of arrival is 9:17.
I'm late. I'll have to punch it.
Speeding will save you just 1 minute and 36 seconds. It will also increase your risk of a crash, as well as the odds that you will be stopped and issued an expensive speeding ticket.
Yeah, but...
In 1 year, there were 22,000 speeding-related crashes in Michigan, resulting in 200 deaths.
If I had someone in the car with me, I'd drive slower. But it's just me.
This is not a logical response. Though you have no passenger, surrounding cars contain 27 others, including 5 children and 1 Labrador Retriever.
How do you know all this stuff?
I know everything, Kevin.
Your risk of a crash increases with every mile you drive over the speed limit. So slow down. Speed enforcement is happening now. A message from the Michigan Office of Highway Safety Planning.
Welcome back, and thank you for being with us. This is Khalil Hachem with US Arab Radio. Thank you to Brigitte for being with us, talking about mortgages, and thank you to Shannon Selby for her time talking about the Detroit Regional Partnership. And I just wanted to add one more note in regard to the Detroit Regional Partnership that Shannon shared with us, and that is DPR, as it is known, does not work with existing businesses unless it is a large business. Their focus is mainly on bringing in new companies to the region. Typically, small, businesses in the community or local communities help existing businesses at the county level or at the township level or at the city level. So I just wanted to explain that. And if you need information, you need to reach out to the Detroit Regional Partnership. The email is real.estate@detroitregionalpartnership.com, or you can just go to their website, which is detroitregionalpartnership.com. You need more information on that, give me a call, 313-819-0101. And the housing market is very tricky right now, because we don't have enough homes yet. Rates are high. There are a lot of misinformation in the online and at the fingertips of a lot of buyers and sellers. And it's very important, if you want a mortgage, you have to deal with someone who is competent, someone who is really good, someone who you can trust, someone who really is going to get you the good deal and not hide any information from you, because it can cost you down the line. And don't make any changes between, once you close for 6 months, 7 months, don't make any changes, because here's why. Most companies would sell you the loan, will give you the loan, and then they have to package it a few months later and then sell it to somebody else. And if there are any changes or any issues or any auditing, it gets you in trouble. And then it's called the escalation clause. And the escalation clause is that you would have to pay off the loan right away. You could lose your home. So don't make any changes until, for some time. And again, if you're in need of a home, you need to buy a home. Okay, buy a home now. and then worry about the rates later. You can always refinance when the rates go down, because renting is you're paying somebody else's mortgage. Renting is 100%, meaning that the rate is 100% because you're not getting any benefit out of it. If you buy a home now, in a few years, your value is going to go up. Okay. And you're going to have more equity in it, more security, as Brigitte said, is very important. If I have a few things on the market, and I just wanted to share them with you. And we're going to have a new listing in the Dearborn area. If you're looking for a home, that's going to go on the market today. And then we're going to hold an open house on Saturday for that in the 48124 area. I also have a condo in the city of Warren. It's fairly new condo. Nobody has lived in it. It was built 2 years ago. It's 3-bedroom, which is unusual for a condo, and 2.5 bath, 2-car garage attached. It's a bi-level 2-bedroom and a full bath on the first level. And then you have master suite with master bath and walk-in closet. And that's kind of like separate by itself. And then you have the living area, the dining area, and the kitchen, all new granite, new appliances. And then you have a half a bath there for visitors. It's a really, really good unit. It's near Van Dyke and 13 Mile, right near the GM Center. Would be perfect for a professional who wants to live in that area, or someone who wants to use it as an Airbnb, because that area is going to have a lot of demand for similar Airbnb next to a huge GM Center. And we have reduced the price on it. It's a really good price, very competitive. Give me a call, 313-819-0101, 313-819-0101. Well, I'm going to have a home for sale in Rochester Hills. This home sits on 1 acre. It's a bi-level home. It's about 2,100 square foot, 3-bedroom, 1.5 bath. It's totally redone, completely redone. It's beautiful with a sunroom, a lot of lights. Also, if you're in the market for that, give me a call. It's not on the market yet, but we can once it goes on the market, I'll let you know. But it's more important if you're interested in the condo. The other thing about the condo is that it has one of the lowest association fee, $200 a month, which is really unheard of for a condo. So this is good if you want to live in it as a professional, or if you want to rent it out, or if you want to use it as an Airbnb. This is a business that's really doing very well. If you run it well, I don't know much about it, so I'm not the person to really advise you on how to run your Airbnb. But it's a really good business. And I sold a couple units to a buyer who, both homes right next to each other, he converted them into Airbnbs, and he's doing very well. He owns about 10 of them in the city of Dearborn, and he's doing very well. And he works on the app electronically. He does really well. If you're interested in the condo, please give me a call, 313-819-0101. It's a really good investment if this is the area that you're going to, or if you're a professional living in that area, this is a really good place to be. Condo living is a little bit different than single family homes. You don't have to cut grass, you don't have to clean snow, you don't have to do any of that stuff. Somebody else does it for you. This is why you're paying the $200 a month. So let me know if there's an interest. 313-819-0101. In general, the housing market is doing good. Again, as we mentioned earlier in the segment, is that yes, interest rates are high, and then we hope that the government cuts the rates, but prices are going to continue to go up. So if you're really in need of home, this is the time to sell. This is also the time to buy. Ironically, we can say that, together, it is a really good time to buy as well, because you're going to need a place to stay. And if you need a place to stay, if you don't, and you can wait, okay, I don't know what you're going to be waiting for, but it's just, time to really make decisions and let us know. If you need any consultation, because every case is different. Okay. Every person has different situation. You can read online, you can do whatever you want, but if you talk to us, if you talk to a professional, that professional will help you really make the right decision. Selling a home, buying a home is a major decision, is a major investment in your life, is one of the biggest investment of your life. You need to do it right. And you need to have somebody with you who is really helping you in making the right decisions. 313-819-0101. Again, 313-819-0101. Thank you so much for listening. Thank you to all our guests. Thank you to Mike for great production. And thank you to our team as well. And you have a good, wonderful weekend.